So we have had a couple of clients that have signed contracts just before all of this COVID-19 stuff came in, and they've had to shut their businesses, they've lost their income, or their income has reduced as a result of it, and the house is not settled yet. So what happens in this instance? You do sign a contract, and unforeseen circumstances, you do lose your income before settlement. So a few factors will influence this, and we'll go through them on an individual basis with each client. How much deposit you're putting in, so what the loan to valuation ratio is, will be a big thing. Do you have excess cash in the account that you can use as a servicing buffer in between now and when incomes return to normal? Are you getting any income at all, or did you receive a redundancy? What does that look like for you if you're getting half pay? Are you getting the job seeker or the job keeper payment? Any of those things will come into play. And what are your employment prospects down the track? If you've lost your income altogether, are you trade qualified? Are you uni degree qualified? Do you have a skill set that is quite unique that you will pick up work? Or do you do something generalized like hospitality or admin? So those things could play in your strengths or weaknesses. In addition to this, we also have had some advice from a good solicitor that we use a lot, that she is adding a pandemic clause into any new contracts that are being signed. So we're sort of encouraging our clients that are looking to buy and sign contracts at the moment to just talk to their solicitor before they sign anything, basically. That way they can do their job and they can advise you on what things you should be adding in to cover off on the fact that there's going to be delays at this point in time, and we have no idea how long. Some financiers are taking up to 30 working days just to pick a file up and assess it at the moment, and that's out of our control. So they can put some things in to cover off on delays. They can put some things into those contracts to cover off if you do lose your income and your finance falls over at the last minute, that you won't lose your deposit, things like that. So we're really encouraging you just to talk to your solicitor before you sign a single thing and just explain the situation to them. Say, is there anything that I can put in the contract to protect me a little bit more given the uncertain times? So to give you an example, we do have a client who signed a contract, had to shut his business, and is able to get the JobKeeper payment, is able to get access to the two $10,000 bonuses, has some cash in his account to cover him as a servicing buffer in between now and settlement, and the banks are quite happy to consider this situation. That is a high loan to valuation ratio application, and that to us says that banks are being reasonable and they're willing to work with our clients to try and get to that favourable outcome.